Last month, Trump issued a ban requiring all countries and individuals to immediately stop buying oil or petrochemical products from Iran. Otherwise, they will face secondary sanctions from the United States and interrupt any form of business dealings with the United States. One of the focuses of this ban is to warn China not to continue importing oil from Iran. But on June 24th, the situation changed. Trump posted on the Real Social platform that China can continue to buy oil from Iran after Israel and Iran achieve a ceasefire. At the same time, he also specifically mentioned that he hopes China can increase the amount of oil imported from the United States. In fact, this statement surprised even U.S. government officials. So why has Trump's position changed significantly? What is his purpose in begging China to continue buying American oil? If you like our video content, please click to subscribe to my YouTube channel so that you can receive all our latest video content. Now, let's get into today's topic. Over the past few decades, China has been one of the world's largest oil consumers. The total annual oil consumption is about 750 million tons. But China's own production is far behind this consumption rate. By 2024, China's annual oil production will be only more than 200 million tons, and the rest can only be filled by imports from other countries. Among the many countries from which China imports oil, Iran is a relatively important source. As far as I know, Iran currently has about 158 billion barrels of oil reserves, ranking third in the world. Moreover, compared with the international market, Iran's oil prices are generally low, usually more than $10 cheaper per barrel. With the overall high international oil prices, Iran's oil price advantage naturally attracted a large number of Chinese oil buyers. According to data from the first quarter of 2025, Iran's total oil exports were about 142 million tons, and China accounted for 63% of them. This also means that for every 10 barrels of oil exported by Iran, 6 barrels are sold to Chinese refineries. In addition to importing oil, China has also made a lot of investments in Iran's energy sector, including purchasing shares in oil and gas companies and cooperating in the development of oil and gas fields. For example, in January 2009, China National Petroleum Corporation and Iran signed a cooperation agreement with a total amount of $1.76 billion to jointly develop the North Azadegan oil field in southwestern Iran, close to the Iraqi border. This oil field covers an area of about 1,400 square kilometers and has a crude oil reserve of 42 billion barrels. It is one of the largest oil fields discovered in Iran in the past 30 years and is also considered to be one of the largest onshore oil fields in the world. In order to improve Iran's domestic refining capacity, China and Iran cooperated in 2017 to launch a $3 billion Abadan refinery renovation project. After the completion of this project, it can process 210,000 barrels of crude oil per day, and the gasoline and diesel produced can also meet the Euro 5 standard. After these years of cooperation, China has participated in the construction of a complete oil industry chain in Iran, covering everything from mining to refining. For China, this can reduce its dependence on oil from other countries to a certain extent. But in the eyes of American political officials, the better China develops, the more threat it will pose to them, which is totally inconsistent with their strategic interests. Therefore, they began to try to prevent China's oil cooperation with Iran. As early as April 2023, Iran transported a batch of crude oil with a total volume of about 1 million barrels and a value of about $80 million through the Suez Rajan of the Greek Imperial Navigation Company, with a destination of China. However, when the ship passed through the Strait of Malacca, it was forcibly seized by the United States without warning. The reason given by the United States later was that the crude oil was escorted by the Iranian Revolutionary Guard, which violated the U.S. sanctions against Iran. Therefore, the United States decided to seize the Suez Rajan and confiscate the crude oil on board. In the end, this batch of oil worth $80 million was disposed of by the United States through auction. Iran also lodged a strong protest against the loss of $80 million in oil. Because this ship sails in international waters, Iran has the right to engage in free trade. Subsequently, Iran formally conveyed its protest to the United States through Swiss diplomatic channels. But the result was as we expected. It had no effect. In order to retaliate, Iran later intercepted 2 Greek cruise ships related to the United States near the Persian Gulf. At that time, Iran also issued a special warning that if the United States dared to unload the oil on the Suez Rajan, it would take further retaliation. However, the United States has not stopped its pressure on Iran. In a previous incident, the United States used financial sanctions as a means to require the Imperial Navigation Company of Greece to unload the Iranian oil it was transporting and threatened to bring criminal charges against it, saying that this would be the first criminal case involving the illegal sale and transportation of Iranian embargoed oil. In the end, the company's subsidiary chose to pay a fine of $2.5 million and unload the oil. And the U.S. measures against Iranian oil have not stopped there. In February 2025, the Trump administration once again launched a maximum pressure policy against Iran, with the goal of reducing Iran's oil exports to less than 10% of the current level. That is from 1.5 to 1.6 million barrels per day to less than 100,000 barrels. In March, the United States again included several companies, individuals, and ships from Iran, India, and China on the SDN sanctions list on the grounds of cracking down on the transportation of Iranian oil and petrochemical products, including 4 Chinese companies and their related ships. In April, the United States further expanded the scope of sanctions, adding a Chinese company and its tanker to the list for participating in the maritime transshipment of Iranian oil. As a result of this series of actions, the amount of oil shipped from Iran to China began to decline, and the decline is expected to exceed 20%. Many people believe that the bulk oil transactions between China and Iran may be difficult to maintain this year. But what no one expected was that Trump suddenly relaxed the oil ban and publicly stated that China could continue to buy oil from Iran. On June 24th this year, U.S. President Trump posted on the Real social platform that China can continue to buy Iranian oil after Israel and Iran reached a ceasefire agreement. This statement surprised many oil traders and U.S. government insiders, because for a long time, the United States has always opposed Iran's oil exports to China. The U.S. believes that oil is the core support of Iran's economy. And if China, as a major buyer, continues to import oil from Iran, it is actually helping Iran to ease economic pressure, which will weaken the effect of U.S. sanctions on Iran. At the same time, China is one of the world's largest oil consumers. If this oil supply line is cut off, China will lose a relatively cheap and resource-rich source of oil. For the United States, this was originally an important opportunity to restrict Sino-Iranian cooperation and strengthen its own energy exports. But now, why would Trump take the initiative to lift China's restrictions on buying oil from Iran at this point in time? In fact, the United States itself is one of the world's major oil producers. Every year, the oil-related industry alone can generate more than $300 billion in revenue. As a long-term major customer, China is naturally very important to the United States. In the early years, China was once one of the largest overseas buyers of American oil, with an average annual import volume accounting for about a quarter of the total U.S. oil exports. In 2016, China imported nearly 7.978 million barrels of crude oil from the United States. But the situation began to change after Trump first came to power. He introduced a series of sanctions and restrictions, including tariffs, chip bans, and restrictions on C919 engine exports, which led to the deterioration of relations between the two sides. By March 2025, the United States crude oil exports to China had dropped sharply to 3 million barrels. Starting in April, China simply stopped purchasing crude oil from the United States and did not buy a drop for 2 consecutive months. As a result, about 18 million barrels of U.S. crude oil could not find buyers and could only be held in their own hands. Roughly estimated, U.S. shale oil producers have lost at least more than $10 billion as a result. Faced with this situation, The United States originally thought that by cutting off the oil cooperation between China and Iran, it could force China to return to the U.S. market. But the result was not as smooth as Trump imagined, because China does not only have Iran as an option. For example, Saudi Arabia. China can completely increase the scale of oil import from Saudi Arabia to replace the share of Iranian oil and continue to ensure stable supply. In addition to China's factors, Iran's own movements are also a key point. In June this year, Iran once threatened to block the Strait of Hormuz, which also worried the United States. According to the information I investigated, the reason why Iran proposed the blockade was in response to the United States entering Iranian airspace and bombing its uranium enrichment facilities. But the Strait of Hormuz is located between Oman and Iran, connecting the Gulf of Oman and the Persian Gulf, and is an important channel for oil exports in the Middle East. About 20% of the world's oil and natural gas need to be transported through this strait. The daily crude oil transportation volume through the Strait of Hormuz exceeds 20 million barrels, and the circulation volume of liquefied natural gas also accounts for about 1/5 of the world. The oil exports of Saudi Arabia, the United Arab Emirates, and the United States almost all rely on this route. If the Strait of Hormuz is blocked, the United States will be the directly affected party. As one of the world's largest oil consumers, the United States may face the problem of rising oil prices and limited supply next. Some research institutions predict that if this sea transportation channel is interrupted, international oil prices may immediately rise by more than 25%. This will drive inflation and also have an impact on the overall U.S. economy. Of course, the U.S. military deployment and geopolitical strategy in the Middle East may be disrupted and even lead to more direct friction with Iran. In this context, Trump's sudden relaxation of restrictions on Iranian oil may be intended to ease tensions between the two sides and prevent the Strait of Hormuz from becoming the next conflict point. But I believe everyone knows that Trump has always been known for his capriciousness. He has shown a strong personal style in many policies and likes to temporarily adjust the direction according to the current situation and his own judgment. Relaxing the restrictions on Iranian oil today does not mean that they will not be tightened again in the future. Even if a goodwill signal is released now, once there is a new conflict, a change in the election situation, or increased internal political pressure, he is likely to change his attitude immediately. But as far as the current situation is concerned, this adjustment is indeed a good thing for China and Iran. To not miss out on our future projects and news updates, please make sure you subscribe to our channel and turn on notifications. We will continue to provide you with more exciting and interesting content.